Hello traders. Today I'd just like to talk briefly about support and resistance. I would like to start with why support and resistance is important. To me, and able to understand Fibonacci levels or chart patterns or wave systems like Elliott or Goodman or pivot points, the thing that all of these have in common, is that they rely on support and resistance levels. And so, in order to understand these systems, you need to understand what support and resistance is. And so, it's really important, I guess, is what I'm getting at. To me, anyway. Some others might argue different, and they might be right. But let's go over what support and resistance is in my eyes. I guess as far as explaining it, the best way for me to understand it is like a pinball game. Price represents the ball. Support and resistance represents the bumpers within the game itself. Whenever price, the ball, moves towards these bumpers, it reacts with them and bounces. Whether price is falling, you're hitting the ball and it's moving up and it bounces, or price is coming back down. It doesn't matter. Whether price is rising or falling, it's going to react to these price levels or bumpers. Now, I'm saying this is a precise science or anything. It's more artistic. They don't always respect these levels, and they kind of go through them at times for various reasons. Anyway, that's kind of an explanation. It's easier to kind of explain it visually though. So right here we have kind of a wave that represents a trending market, and over here is a kind of a wave that represents a trading market or ranging. So the market's moving up, and then we have an area of resistance. So it bounces, a bumper. Market retraces, we have an area of support, another bumper. The ball is moving back down. So it bounces back up, you have an area of resistance, price bounces, the ball bounces. Moves back down, price bounces. Price bounces. Now, because this is a trending market, another way that you can represent support, especially support, because you draw trend lines with the support rather than with the resistance. Oh, that's the way I was taught anyway. There's a few different ways I've seen though. So to use it effectively in this kind of scenario, draw a trend line. So if you're anticipating the market to continue its directional bias in this direction, which would be like a bullish direction obviously, you would look to enter right here somewhere along this trend line as a buy. Okay, now over here we have a ranging or a trading market, whatever language you prefer. So, but there's still areas of support and resistance. So right here we have resistance, we have support, resistance, support, resistance, support, resistance. And so this being a ranging market, an easier way to look at it is just straight horizontal lines where price often does this. It just represents the same, bounces off the same level while it's consolidating. Same level while it's consolidating. Kind of screwed up my wave when I drew it obviously, but I think you get the idea. And so if you're looking to trade the range or anticipating a breakout, if you're just playing the range, and you can obviously sell right here, buy back right here, sell right here, buy, sell, buy, sell, buy. Now if you're looking for a breakout and say a direction like this, then obviously you're just buying right here. and looking for it to break this level. Some people actually might anticipate a breakout and then buy after it breaks this little level right here. It's just a matter of opinion or preference. So let's look at some actual charts for a second. Let's look at Australia and Japan first. I'll give you that same example of a trending market, because obviously Australia and Japan, as you can see, I drew that earlier, but it's very trendy right now. So let's try support and resistance. Right here we have support. We have support again right here. We have support again right here. Now we can draw a trend line in this, but it's not going to be as accurate because obviously we had this kind of directional bias that went like this, and then this sudden uplift. But you still can do it and find, especially when we had consolidation back there, obviously. So if you came like this and drew it outward, we can go all the way top because it's obviously finished, but I wanted you to look at it from the beginning. Say you found it was continuing its race upwards after this consolidation, you're like, oh, you have another movement up. So you found where its base of support was, another movement up, found its support, another movement up, and you drew your trend line right here. You look to buy right here. You know, that would have been a great buy. Look at this, even if you moved your stop, you know, right here, you get all this and you're still in it, even though the market broke the trend line for a second right here. Just kind of expected because it kind of broke the mean direction for a second, so it kind of broke both directions. But anyway, another support line, I'm going to use horizontal right here, is because this is a double top, which is kind of indicative of a reversal, which it did reverse much more strongly than it did anywhere back here. It found direction again, though. What I wanted to point out is that the more times the price level or support or resistance level is respected, or the market reacts to that level, the stronger it becomes. And so as you can see, resistance, the market came back out, resistance again, and then boom. Obviously it respected it so much that it went down all the way down to here. But when the market rebounded, it found resistance at that same level right here. Now the other thing to understand is that support becomes resistance and resistance becomes support. So as the market came up, look what happened when it retraced. I found support at that same level. This is very indicative, if, like I said, if the market respects this level multiple times, it becomes more of a major theme of resistance or support. So the market came down, it already respected it once, twice, 3 times, and now that became support. As to why that is, there's a lot of arguments. I think mostly it's just a psychological thing. People just, they see it and they're like, oh, well, that's obviously an important level. You know, maybe it's just subconscious, you know, maybe it's just a dealing spread, I don't know, but it's very evident right here. You can look at the pound has this kind of same thing going on right now. If you're wondering why I go from bars to candlesticks, it's because I look for formations with bars and then I enter with candlesticks. But if you look right here, look at this support line in a ranging market. This is a strong, sorry about that, that was my phone, area support when the market was consolidating, ranging, right? Kind of had the same thing carry over here. You know, obviously I said it's kind of artistic, and it fluctuated in and out of it. It's probably better to understand support and resistance as zones rather than strict price levels. But it's easier to draw them as lines, so whatever works for you. Now you look at the top of this range, where I was finding resistance. You found resistance over here again, and then over here again. And it kind of had support right here. It still has support kind of in the same zone, and we'll see where it goes from there. But you see how you can trade support and resistance when you're looking for breakouts. This market's ranging. If you would have sold even right here at the top of the range, you would have found, I'm not sure, it's probably, let's see, 53, 50 pips or so. So support and resistance alone can be an effective way to trade the market. I think I'd just like to conclude right there. I hope you enjoyed. Good trading.